All right, let's dive right in. In the huge, loud, blockbuster movie that is the financial market, there's a secret agent, an operative who works in the shadows, rarely gets the spotlight, but is secretly pulling all the strings. Today, we are opening up that agent's secret dossier. We're talking about bonds.
And yeah, this quote from our source material just absolutely nails it. While everyone's watching the flashy heroics and the chaotic villains, the real power is moving quietly just behind the scenes. That's the world we're about to step into.
I mean, think about it this way. You've got Agent Stock, the dramatic hero, right? Always in the headlines with these epic wins and crushing defeats. Then there's Rogue Crypto, the total chaotic wild card, unpredictable, maybe a little dangerous, but super thrilling. And then you've got Agent Bond, the quiet professional, disciplined, mathematical, and unbelievably influential, but almost totally ignored by the general public.
So, to really understand this agent, we got to go back to basics. What's their fundamental move? Let's just forget all the complex finance stuff for a second. At its heart, a bond is just a really simple loan, something even our furry friends can wrap their heads around.
Okay, so here's the official textbook definition. It's a very straightforward contract. You lend out your money. That's called the principal. In return, you get these regular interest payments, and then at the very end of the deal, you get your original money back. Simple, right? But we can make it even simpler and a whole lot cuter.
Okay, picture this. We've got a dependable golden retriever, and he's got his most prized possession, a squeaky toy. That toy is the principal. Now, he lends it to this ambitious corgi who's starting a new artisanal dog biscuit business. As a thank you, the corgi gives the retriever a little treat every single month. Those treats, that's the interest, or what we call coupon payments. And then, at the end of the year, the corgi's business is a huge success, and he returns the original squeaky toy, totally safe and sound. That's it. I'm serious. That's a bond.
All right, so the concept is pretty straightforward. But what makes one squeaky toy loan more valuable than another? Now, here's what's so cool about this. Unlike a lot of other assets, a bond's price isn't based on hype or, vibes. It's based on pure, elegant math.
So, the secret sauce is this. A bond's price today is simply the value of all those future treats, plus the value of getting that squeaky toy back at the end, all calculated in today's money. We do this through something called discounting, which is just a fancy way of saying a treat you get next year is worth a little less than a treat you get right now. So you just add up the present value of all those future treats and the final squeaky toy, and boom, you get a precise price. No guesswork needed.
Every great secret agent has a signature move, right? And Agent Bonds is probably the single most important one in all of finance. It's this fundamental law that governs the entire market, and it works exactly like a seesaw.
This is it, the golden rule. This is the absolute beating heart of the bond market. When interest rates, or what we call yields, go up, bond prices fall. And when yields fall, bond prices rise. They always move in opposite directions, always.
And this is just the perfect way to picture it. Imagine two squirrels on a seesaw. If one squirrel, the yield squirrel, jumps up, the other squirrel, the price squirrel, has to go down. And if that yield squirrel comes back down, the price squirrel goes flying up. It's a perfect inverse relationship. If you can understand this one simple seesaw, you're already halfway to understanding the entire bond market. So, what exactly is that yield we keep talking about on the seesaw? Well, it's often called the yield to maturity, or YTM for short. The easiest way to think about it is like the bond's total expected mission return. It's the one interest rate that wraps up all the future treats and the final return of the squeaky toy, all based on the price you pay for that bond today.
Okay, now that we've got the signature move down, let's open up the briefcase and look at the agent's advanced gadgets. Just like any elite operative, Agent Bond doesn't go into the field unprepared. They have these really sophisticated tools to analyze what's going on and predict how a bond's price is going to react to any changes.
So, the agent's main toolkit has two key gadgets. First up is duration. Think of this like a precision laser sight. It tells you almost exactly how much a bond's price will change if interest rates move by 1%. But, for bigger moves in interest rates, that laser's aim can be just a little bit off. That's where convexity comes in. It's like a shield corrector, fine-tuning the estimate so you get a much, much more accurate prediction.
But then there's the ultimate gadget, the one that can practically see the future. And that is the yield curve. This single chart, which just shows interest rates across different lengths of time, is one of the most powerful and honestly, kind of spooky, reliable economic predictors we've ever found.
The shape of this curve tells a whole story. A normal upward sloping curve, we can call that the happy puppy curve. It signals that the economy is expected to grow. A flat curve is more like a confused cat, not sure which way to go. It means there's a lot of uncertainty. But an inverted downward sloping curve, that's the sleepy bear, and historically it has been an incredibly accurate predictor of an economic slowdown or even a recession.
Okay, so we've seen the basic moves and the advanced gadgets. Now it's time for the big reveal. How this quiet, unassuming professional is secretly the puppet master of the entire global financial system.
The influence that bonds have is just staggering. They quietly set the price for your mortgage, the cost of building a new doghouse. They determine how much it costs for a company to borrow money to fund, say, a new catnip enterprise. But it goes so much deeper than that. Stock market valuations, currency exchange rates, government budgets, the stability of our entire banking system, and even our expectations for inflation. It's all profoundly shaped by what's happening in the bond market.
This really says it all perfectly. Bonds are the quiet giant. They are the financial system's center of gravity. Everything else you hear about, stocks, currencies, commodities, it all just orbits around the immense, unseen pull of the bond market.
So what's the ultimate lesson from our secret agent? What's the core philosophy, the code that makes them so powerful? Well, it's really a rejection of the chaos that you see in so much of finance.
The agent's code is so simple, but it's incredibly profound. It teaches us that in a world that's obsessed with speed and volatility, stability has value. Predictability has value. Those guaranteed cash flows, knowing for sure you'll get those treats on time, that has real, tangible value. And the discipline to stick to a plan based on math, not on emotion, that has the most value of all.
And that leaves us with this final thought. While all the other agents are out there causing explosions and grabbing all the headlines, Agent Bond is there to remind us that sometimes the true power isn't in being the loudest, but in being the underlying structure that allows everything else to even function. The quiet professional is and always has been in control.